Did you know that there are massive, huge, and very big shifts happening in the gold market right now? And the best part is that these shifts have a potential for 1,000% times growth. Well, if you want to know how to take advantage of this incredible opportunity, then keep watching. The gold market is experiencing seismic shifts that have the potential to transform your investment portfolio like never before. And who better than the incredible Lynette Zang, the chief market analyst for ITM Trading, to guide us through this thrilling journey. By the end of this video, you'll understand why these changes are so significant and how they can supercharge your wealth accumulation strategy. Let's dive right in. In a significant development in the gold market, the Texas House Committee recently passed a groundbreaking bill on May 2nd. This bill proposes the creation of 100% reserve gold and silver-backed transactional currencies. If enacted, it would provide individuals with the option to conduct businesses using sound money, specifically gold, and create a viable alternative to central bank digital currencies. One of the key objectives of this bill is to undermine the Federal Reserve's monopoly on money. By introducing gold and silver-backed digital currencies, it challenges the current system that relies on fiat currencies controlled by central banks. This move aligns with the growing global interest in sound money and the desire to establish alternatives to the traditional monetary system. While the bill has not yet become law, its passing in the Texas House Committee signifies a noteworthy development in the gold market. Texas, known for its thriving gold industry and having its own gold vault, is taking a proactive step towards expanding the role of gold in the state's financial system. If this bill is ultimately enacted, it would enable individuals to convert their digital or paper currency into physical gold, ensuring that the currency remains backed by tangible assets. This feature is crucial to safeguard against potential abuse and to maintain the stability and trustworthiness of the currency. The potential impact of enacting the bill proposed by the Texas House Committee is significant, as it could offer a viable alternative to traditional currencies. While the bill is still under consideration, its potential lies in providing individuals and businesses with an option to conduct transactions using a currency backed by gold and silver. This could introduce a new level of stability and security in financial transactions. In her analysis, Lynette Zang highlights the importance of convertibility in the proposed bill. She emphasizes the need for physical metal backing to prevent abuse and ensure the long-term value of the currency. By allowing individuals to convert their digital or paper money into tangible assets like gold, the bill aims to protect against potential depreciation and maintain the stability of the currency over time. Central banks worldwide have been accumulating gold in recent years, recognizing its intrinsic value and lack of counterparty risk. Nations such as China, Russia, India, and Kazakhstan have been actively acquiring gold reserves, signaling a shift in power from the west to the east. This accumulation demonstrates a growing recognition of gold as a valuable asset and indicates a strategic move by these countries to diversify their reserves and reduce their dependency on traditional fiat currencies. The enactment of the bill could lead to potential wealth transfers and power dynamics in the event of hyperinflation in the global fiat money system. Lynette Zang explains that if hyperinflation were to occur, individuals and entities holding gold-backed currencies would likely preserve their wealth and purchasing power. This could result in the redistribution of wealth and influence, with those holding gold gaining an advantage in navigating the financial landscape. The potential impact of the bill extends beyond individual wealth preservation. It opens the door to a more resilient monetary framework that is not solely reliant on the existing fiat currency system. By introducing a gold and silver-backed currency alternative, the bill aims to create a more stable financial system, safeguard against inflationary pressures, and empower individuals with greater control over their financial futures. Enjoying this video? Give it a thumbs up and share it with your loved ones. Don't forget to subscribe and hit that notification bell to stay updated with our latest content. Now, let's jump right back in. Gold plays a pivotal role in the global financial landscape as the primary currency metal. It serves as a reference point for revaluing currencies during overnight resets. This means that when a currency undergoes a significant devaluation or needs to be recalibrated, gold serves as a reliable benchmark against which the currency's value is adjusted. Silver, while also functioning as a monetary metal, has a distinctive characteristic compared to gold. It has a higher demand in manufacturing industries due to its unique properties, such as electrical conductivity and thermal conductivity. Unlike gold, silver can be used up in various applications, including electronics, solar panels, and medical devices. This dual role as both a monetary and industrial metal gives silver an additional layer of value and potential price volatility. The inclusion of both gold and silver in an investment portfolio is crucial for diversification and protection against inflation and currency devaluation. These precious metals have a historical track record of preserving wealth during times of economic turbulence. Their limited supply, scarcity, and intrinsic value make them a sought-after asset class for investors seeking stability and long-term growth potential. Lynette Zang also sheds light on the life cycle of currencies and the recognizable patterns that often lead to their devaluation. Currencies, like any other asset, experiences cycles of rise and fall, and their value erodes over time due to factors such as inflation, excessive money printing, and geopolitical events. One of the significant challenges within the current financial system is the erosion of purchasing power in traditional currencies. Over time, the value of fiat currencies has steadily declined, with only a fraction of their original purchasing power remaining. This erosion is primarily caused by factors such as inflation, excessive money printing, and economic instability. As Lynette Zang highlights, this loss of purchasing power can have a profound implication for individuals and their ability to maintain their standard of living. Lynette discusses a specific challenge faced by depositors in the current financial system: the testing of negative interest rates by central banks since 2009. Negative interest rates essentially mean that depositors are charged for keeping their money in banks rather than earning interest. Practice has significant implications for depositors' funds as it can erode the value of their savings over time. The legal framework surrounding banking practices is another challenge within the current financial system. Lynette explains how banks are permitted to use deposited funds as collateral for loans, thanks to regulations such as Regulation D enacted in 1995. It effectively means that when individuals deposit money into a bank, they are legally loaning their funds to the bank rather than simply holding them in a safe and secure manner. The current financial system's heavy reliance on debt and compounding interest is another challenge that possesses and poses a threat to stability. Lynette highlights how the never-ending cycle of debt, where interest accrues on existing debt, can lead to unsustainable levels of borrowing and repayment obligations. This system can eventually result in hyperinflation, where the value of money rapidly erodes and confidence in the currency diminishes. Lynette Zang stresses the importance of owning physical gold and silver as a means to ensure ownership and independence. By holding these precious metals in physical form, individuals can have direct control over their assets. This physical ownership provides a sense of security and empowers individuals to protect their wealth and financial well-being. During periods of hyperinflation and when confidence in traditional currencies diminishes, physical gold and silver serve as a reliable store of value. Precious metals have a long history of retaining their worth and acting as a hedge against inflation. The historical example of Venezuela's economic crisis serves as a compelling case study to showcase the potential benefits of owning gold. During Venezuela's hyperinflation, the price of gold skyrocketed, allowing individuals who held physical gold to preserve their wealth and purchasing power. This demonstrates the importance of diversifying one's portfolio with physical gold and silver, as they can act as a wealth preservation tool during times of economic turmoil. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.